Hello, everyone, and thanks for taking the time to review the Morgan Hill Real Estate Market Analysis for March 2008. My name's Robert Whitelaw, and I'm a licensed California real estate broker. I'm also a member of the National Association of Realtors and a certified ePro. It's kind of an interesting month for March in Morgan Hill. We're going to go ahead and jump in first and start with the supply and demand numbers, and that basically is where we take a look at the inventory numbers, the number of homes that are listed, and the number of homes that are sold. Let's start off with those inventory numbers. We're seeing the same kind of trend we've been seeing for a long time. Ever since 2005, we've been seeing steady growth in the amount of inventory that we have. You can see that the slope, the rate of increase that we've been seeing over the years in March has dramatically increased between 2007 and 2008. You see how you can draw sort of a straight line there to hit the very tops of the 2005, 6, and 7 graphs for inventory, and then you see a dramatic increase in 2008. That's been the same trend we've seen over the last few months. So there's a lot of properties out there in the market trying to get sold. Now let's go ahead and see the next series of numbers, which are the listed homes. These are the homes that get listed in the month of March. Now the good news is we're starting to see a decline in the number of properties that are entering the market. This is good news because anything that stops that amazing growth in the number of homes that are out there trying to get sold is a good thing. Because remember, I call this supply and demand because that really does seem to be the primary mover in the market right now. When you have a whole lot of supply of something, the demand is down. So there's a whole lot out there and not a lot of people asking for it. So hopefully we can get that dealt with. One good way of doing that is fewer people entering the market trying to sell their home. Now, if we look at the sold numbers, we really don't get any comfort there at all. We've seen a steady decline again since 2005. It was really stable from 2006 to 2007, but we saw a profound dip between 2007 and 2008. You mix that with insanely high inventories, and one sort of explains the other. Your sales are far lower. Number of homes in inventory obviously increases because they're not being taken off the market. Now, to give you the specific numbers here, between 2007 and 2008, we saw the total inventory increase by 52.8%. That gave us a grand total of 327 homes on the market. The number of homes that sold was down by 58.3%, almost a 60% drop in the number of homes sold between 2007 and 2008 for the month of March. That gave us a grand total of 15 homes that were sold. Now, new listings, this has some good news, down 11.6% for a total of 76 homes listed in the month of March in 2008. Now, if you do some quick math to sort of put it into perspective, if the inventory froze where it is right now and we stayed at the sales levels we are at right this minute, we'd have enough inventory to last for 21.8 months, almost 2 years' worth of homes currently on the market. Another way to look at it is for every seller out there who manages to get their home sold, there's about 21 other homes trying to get sold on the market. Now, next, let's go ahead and take a look at the supply and demand numbers, but this time looking back over the course of months. So we're in the March 2008, we're looking all the way back to December of 2006. I like to have a little bit of go back a little bit more than 12 months because we're looking for trends here, and we're looking for one of the things that I think is a key to figuring out when we're at a point when things are going to make a change one direction or another is when you suddenly see numbers doing things that historically are unusual. We saw that happen a few years ago when the market started to go way to the side of buyers. And whenever I think we see a change coming again, we'll see something uncharacteristic for the season and the time compared to previous years happen. So let's see where we are right now. Now, between December of 2006 and March of 2008, you can see there are some seasonal changes there. The wintertime, we see a decrease. We see an increase in inventory in the summer months, but generally just a steady increase. If you were to draw a line that was the average at each point of all of these different lines, you'd end up with a upsloping line. So inventory is just tending to increase. Now, the number of homes that are listing, the good news is that it peaked back in May and June. We saw another little peak in October, which was very uncharacteristic. That's one of those things you'd look for that's unusual. Usually people leave the market in October, but they didn't in 2007. A whole bunch of homes joined the market. But you can also see that we've seen a steady decline in the homes that have been selling, and that's the yellow bar. So where do we see any other strange occurrences? We were seeing the same sort of inventory that we saw last year. We saw an increase in inventory. between February and March of last year, we saw an increase in the listed homes. We saw the same sort of increase this year. Between February and March of last year, we saw an increase in sales. Now, the good news is that we see the same thing this year. So it's sticking to the sort of trends, and that's normal. You usually see January, February, March. You usually see sales start to increase. March is usually when at least last year we saw it this way, when this quote-unquote season starts to begin. We see more homes getting listed, and you see more homes starting to get sold. Now, when we just compare February to March, inventory was up 5.1%. Number of homes listed was down 19.1%, which is unusual. We usually see an increase in listings in the month of March. As I said, we're tending to hit the month when the season gets a little hotter. Sellers want to take advantage of the fact that there tend to be more buyers starting around in March, but we didn't see sellers jumping in like we did last year. That's kind of interesting. Maybe it's just sort of a realization that the market's not there to give them what they want, but it's an interesting thing to note because it doesn't go with what we've seen historically with our numbers. Now, let's go ahead and take a look at home prices and see what they've done there. Now, the beige bar is the average price of a home. The blue bar is the median price of a home. And let's just get right. Let's start off with jumping right to the numbers because this is pretty a self-explanatory graph, really. You can see that growth. Look at the average price, 1999. All the way up until 2006. For the month of March, we saw a pretty steady increase. What's interesting is that in 2001, we normally see a drop there because of a market downturn there. You can see that for the month of March anyway, like I said, it tends to be when the market tends to pick up. Even back in 2001, we had a disappointing selling year for homeowners. It tended to be flat between 2001 and 2002. So that's very clear. Now the changes, the average price of a home is down 18.1% between 2007 and 2008 for the month of March in Morgan Hill. That average price was $758,633. The median price was $660,000. Now, if we just to calibrate ourselves, this is actually some interesting data. Because we're going to see some numbers in a minute that might freak everyone out, but I'm trying to set the stage here to make it a little bit more of an understandable number. Now, the highest price home in Morgan Hill sold for $1,835,000. That was on Lewis Holstrom Drive in Morgan Hill. The original asking price was $1,899,000, so not a big dip from its original asking price. Interesting, though. The days on market for that property was 198 days. Now, the next property we're going to talk about was the lowest priced single-family home in Morgan Hill, and that was on Pinion Way in Morgan Hill, and that sold for $405,000. Its original list price was $450,000, sort of $45,000 drop in asking in between list price and sales price. That home was on the market for 236 days. All right, now kind of keep those numbers in your head. The average is right around 210. And the average price per square foot in Morgan Hill was $314.08. Now, let's go ahead and take a look at these same numbers going back months just to look at the trends. Again, you can see average prices are trending down. On average, they're lower, and they're continuing to do that, and you can see the changes all through the year there. The percentage change between February and March, the actual change in prices wasn't really that substantial. We saw about an 8% drop there. The next thing is what I'm really sort of setting the stage for here. We're going to look at days to sell. And this number is going to be it's a little bit high. This is definitely a contrast to what we've seen in areas like Cupertino, where I did a similar video presentation for that. Now take a look here. We had 219 days to sell on average in Morgan Hill. And at first blush, that seems like an insane increase. That's a 114.7% increase from 2007 to 2008. And within the 15 homes that sold, The lowest days on the market was 7, and the longest days on the market was 416. Now, I want to explain this number because whenever we get into samples that are as small as, say, 15 homes, sometimes these numbers can go a little crazy just based on one listing that had an insane high number. Now, that isn't the case here, but the news that we do get is actually pretty good. If we go and we take a look at the homes that sold, all 15 of them, all of them tend to be high numbers. We got 198, 345, 324, 157, 205, 275, 256. The point I'm making here is that unlike previous months, we're seeing a lot of homes that have been on the market for a very long time suddenly selling. And that's interesting because that indicates a difference. These homes were staying on the market for a really long time. They weren't getting sold, and suddenly they are getting sold. And what's really interesting is a lot of them are selling for very close to their asking price. I'm seeing a $25,000 difference. I'm seeing a $4,000 difference. Even on these homes that have been on the market for 324 days, 416 days, even the one that was on for 416 days only got $18,000. It actually sold for over asking price. The list price on the 416-day home was $500,000, and it sold for $518,000. That's why this is interesting. Homes that weren't getting attention suddenly are getting attention. The homes that are being taken off the market have been on there forever. That indicates to me a difference in the way buyers are buying. Now, the 15 number isn't a great number. It's a low number. But the kind of homes that are getting sold are very interesting. And the fact that some of them are selling for more than asking price, also very interesting. So instead of looking at that 219 days on market number as something to prepare yourself for and think if I'm trying to sell in Morgan Hill, I should be thinking 219 days, don't think that way. Think of it as the plumbing on the inventory pipe has been backed up. And suddenly we've got buyers that are taking homes that have been stuck in that pipe for a really long time and taking them off the market. So I don't think that's specifically indicative of an actual real increase in average days on market and the cumulative days on market. I think what we'll see is, and this is me sort of ballparking where I think we're going to go with this, I think we can expect to see higher days on market as we get more homes that have been on the market for a long time out of the system. But I think what we'll also see, as we're seeing here in just a starting level, homes that have been on the market for a relatively short period of time. We had one home here that was just on the market for a week. Here's another one that was a couple of weeks. So we'll see what happens. It's interesting to see this sort of change in the makeup of the homes that are selling. I think next month will be very interesting. If we see the same sort of trend with a few of the newer listings going quickly and a whole lot of the really old listings getting taken care of, I think that's actually a good thing for our market, and I think it's an encouraging sign. All right, now let's take a look at the days to sell just relating to the past months. Again, this is a big change, kind of thing you'd want to look at, and we've explained that. And we've seen that on average the amounts have been increasing, but not by a huge amount. I mean, if you just looked at December to February, it seems like sort of a stabilizing thing where if you take into account seasonal changes, the days on market seems to be sort of wobbling right around this central point of right around 100 days. Again, next month I think is going to be an interesting month just to see how everything is comprised. And if you just look at February to March, the number of days to sell was up 112.6%. But I think this is, like I mentioned before, where I talked about when things happen that are statistically unusual to previous times, that's a time to look a little bit more closely at the data and find out what's causing that. Next month, I think will be a very interesting month for us to examine these same kinds of numbers and see how they're made up. Now, that's really about it for this month. I encourage you to take a look at, just to sort of get an idea of how much variety there is in Santa Clara County. I'd recommend you take a look at my report on Santa Clara County and Cupertino and other communities just to see how different these areas can be. Cupertino compared to Morgan Hill are in completely polar opposite directions, and yet they're in the same county. They're not that far from each other. They're only about 20 minutes apart from each other. And it's amazing the difference. And And of course, when you start comparing Cupertino to areas that are even closer, there are areas that can be just a few blocks away that see far less performance than what Cupertino has, or Saratoga, or Los Gatos. So I encourage you to take a look at those just to get an idea of how dynamic our county is. If you have any questions, ideas, or suggestions, I encourage you to get in touch with me. Email is probably the best way. You can contact me at robert@soldbyrobert.com. If you'd like to look at any of my other video presentations, you can see those on YouTube. You can also look at them on my website at www.soldbyrobert.com. And finally, if you'd like to give me a call, talk to me about real estate, or if you or someone you know is interested in buying or selling real estate in Santa Clara County, please feel free to give me a call. You can reach me at 408-852-0525. Thanks for taking the time to listen, and I look forward to talking to you next time.